Hi there, and you're watching The Week Ahead with me, Darren McDermott. I have Christian Schulz on the line, and he is an economist at Berenberg Bank in London. So Christian, last week hitting headlines was the major impact the conflict in Syria had on the market, specifically on oil. Now there will be many discussions held this week. Do you think we're going to see another impact on markets this week?
Syria itself, obviously, economically doesn't matter that much. For all the suffering that we're seeing in Syria, the country is small. It's not a big oil producer. So everything that's happening around this country is more about the impact it could have on the wider region, on countries such as Iraq, which is a neighboring country, Turkey, Iran, or Saudi Arabia, which are much more important oil producers. Now, this week we're probably not going to have any decisions on whether there will be a military intervention in the U.S. It seems that the U.S. Congress is going to discuss the topic next week. So it's all about the likelihood of what Congress will do next week. So speeches which would be more hawkish will be negative for markets. Those which signal more hesitation will be positive for markets. So there's going to be some volatility, but ultimately we're talking about an economically relatively insignificant country, so anything that is going to happen will probably be short-lived.
And Christian, looking at Europe, we have ECB and BOE rate decisions and some other data coming out. What will you be closely monitoring, and what are you expecting to see in terms of market reactions?
Well, it is a pretty big week in Europe in terms of data. We get some of the most widely followed indicators, the PMI, the purchasing manager indices. We already, in fact, had them for manufacturing, and they were strong. We will have the same for the services sector on Wednesday. That is also likely to be strong, both in the Eurozone, but also very strong in the UK. So quite some potential for good news. And then, as you mentioned, on Thursday, we have the central banks meeting, the Bank of England and the ECB. As usual, most focus will be on the European Central Bank because Mario Draghi will give his press conference afterwards, and that's what we will be focusing on as well. Is there, first of all, a change in tone, maybe slightly less dovish than recently? Because all that positive data just points to a stronger than expected recovery in the Eurozone. So he might be a little less dovish. Also, the ECB will publish new economic forecasts, and they could be revising up growth forecasts for the first time in a very long time, which could also mean at the same time more trust in this recovery, but also maybe less monetary accommodation, or at least for a less long period. So yes, that's really going to drive markets this week. In fact, with Syria a bit on the back burner now, that may actually be the most important thing to be watching.
And now let's have a look at Asia. Hong Kong stocks led Asia's gains today after positive manufacturing data from China actually reinforced an image of stability. Now we also have some Japanese GDP out on Wednesday. What sort of week do you expect it to be for Asia?
Yeah, I think you mentioned the most important point, and that is China seems to be safe. The manufacturing PMIs we had over the weekend, and probably also the non-manufacturing PMI we have later this week, show that all that turbulence that has been hitting emerging markets like India and Indonesia hasn't affected China at all. The country is well insulated against changes in American monetary policy. The currency is still managed. The country has huge reserves, and it ultimately benefits from the recovery in the Western world as well because of its huge exports. So China is safe. Now, China is really the focus point for Asia, but also the biggest export market in Asia for many Western European countries. So as long as China is safe, things for Asia are also looking up, and therefore it's probably going to be a relatively positive week. In Japan, the recovery is still continuing, but the latest data have been slightly underwhelming. So maybe the most optimistic of expectations won't be met. But overall, at least for the time being, things are looking up. The interesting thing in Japan will be less the economic data, but more the discussions about structural reforms that we're expecting to see over the next few weeks as Parliament returns. They need immigration reform, they need a deregulation of the economy, and if they don't deliver on these things, then Abenomics might just turn out to be a flash in the pan rather than a structural return to higher growth in Japan.
And finally, Christian, before I let you go, what else will you be keeping a close eye on this week?
Well, one big number that comes out every month, which people will be watching and which we will be watching, is the non-farm payrolls, or the employment and labor market data from the US on Friday. The maybe biggest event for markets this month will be the Fed meeting on the 18th of September, where we're expecting them to make an announcement that they will reduce their monthly asset purchases. That's what everybody has been discussing ever since May. And now it may be delivery time, and the labor market data on Friday may well be the last important data point before that. So we're expecting strong growth, or jobs growth on Friday, and that will then probably seal the deal for that 18th of September Fed meeting.
Thank you very much, Christian, for that. Well, viewers, do stay tuned to Dukascopy TV, and I also conducted a Targets in Focus today, so make sure you also tune into that. Have a great day.